I'm also recording separately. Okay. So let's start. Bismillahirrahmanirrahim. Thank you very much for the everyone who has joined us. I think we have just six of us right now. But anyway, I will
अली
try
भाई सॉरी,
to.
आपकी आपकी आवाज थोड़ी सी दूर से आ रही है, जरा क्लियर नहीं है।
Now it's
हाँ
better.
क्लियर है।
Now it's better. The mic थोड़ा दूर actually is it better now?
जी, स्लाइटली बेटर, ठीक है।
गेटिंग
Okay, I will
बेटर,
try to get closer to the mic. Okay, just give me a second and see if I can. How can I? I'm actually struggling with controls technology. Record of this conversation.
Recording in progress.
Okay, all right. So today's session is about trading micro e-mini futures, and I'm not sure we have six here. Or Rahman Babe is joining us, so let's admit Rahman Babe. And so we are not sure that has anyone traded so far futures, especially e-mini or e-mini micros. Maybe someone like
I haven't. I haven't about, not sure about the others.
you mean Rahman? Who's this? What's
No, Mubashir, I haven't.
So Washir, have you been successful or how long you've been trading this?
No, I'm saying I haven't.
You haven't. You haven't. Okay, I'm sorry. So is anyone else has traded so far? Yes, no.
Not by myself.
Okay, maybe Rahman has some experience because I know he has traded some futures. Sorry, options. Anyway, and some people know about it, like say Wasim and others. So let's move, and we have. So first disclaimer: this material is just for educational learning purposes only, and it's from my own experience. And trading and investing in stocks and derivatives, especially futures contract, is highly risky and could result in a substantial or complete loss of invested capital. Speaking of myself, I'm not a registered financial advisor with FINRA or SEC. And for any financial advice, please consult to a registered financial advisor. This is all for just for learning purposes. Please do not take it for a sell or buy recommendation kind of thing. We quickly go through the agenda. We first discuss what are the e-mini future contracts, what are their pros and cons, what are margins and commissions that we are looking at from brokers, what should be our objectives, and tools, indicator setup, preparing for the day, what is our trading strategy and the risk management. We'll see some chart examples and some challenging days if we have some issues with our trading, what to do, and where we can go from now if you are serious about trading, and where are some resources. Now, what about the future? Sorry. Any question? No. Okay. What are the micro e-mini future contracts? So, people who don't know about future contracts, futures are basically financial contracts obligating the buyer to purchase an asset from a seller at a given particular date in future. In our case, we are just trading the future contract for S&P 500 and Nasdaq, or in other words, equity indices, and the Russell. Otherwise, futures are of almost everything. If you take a look at this, and they are futures of grains, they are futures of soybeans, energies, gold, livestock, metals, corn, you name it. But we are just interested in the futures of indices, which are S&P 500, as I said earlier, and this is our E-mini S&P 500 future. This is Nasdaq. This is Dow. This is Russell. We are just interested in these because we cannot trade everything. And one of the key of doing anything is that you should know what you are trading. For example, if you're trading crude oil, then you should know how crude oil moves. What are the aspects of crude oil market, and the product itself? What is it? So we should know what is S&P 500 and what is Nasdaq 100 index, and what are the Russell index before we start trading their futures.
Yeah. Huh?
Yeah, go ahead. Any question? No. Okay. So now, what is E-mini S&P? Normally, what we say, for example, S&P is currently trading, let's say, around a value of 4,300, the S&P 500 market. So the future contract is approximately 250 times the value of the future contracts of this value, whatever it is, something around more than $1 million. But that was too big to trade for small people or in traders, investors. So in 1997, the CME group. CME group is the main group which handles all. This is an exchange, especially they operate in Chicago, and they deal in derivatives like options and futures. They came up with a product known as E-mini, and which was very successful. And the E-mini, standard E-mini contract, is 1/5 of the full size. So standard full size was the 250 times, but E-mini is approximately 50 times of the S&P index. So the value of the one E-mini S&P contract is $215,000 if S&P is being traded at 4,300. Now, since the S&P is rising in value over the period of time, now they have come up with a smaller size, a fraction of that, which is 1/10 of the regular E, and they call it micro E-mini. And this micro E-mini is it's a very interesting product, and I would say it's a market changer kind of thing, because it's so small in value, but at the same time, so you don't need to have a large base of capital to trade this thing. At the same time, it offers you same liquidity and same kind of leverage. So small account holders, they can even start trading micro E-mini and even the E-mini with a value of $500 account. That's it. Because what happens? What's the notional value? The E-mini is 215,000, and micro E-mini is 1/10 of this, which means its value will be just 21,500, right? 1/10 of this value over here. And then the future broker will give you a leverage on your account, which is more than 90% of the time. So all you have to put up is just $50, as we will see, for one contract. So which gives you a very, very, very useful tool in order to trade it and make some good amount of side money. The micro E-mini contracts of futures are suitable for people who are seeking additional daily income. I would say it could be a side daily income, not your main source of income, unless you become a master who want to work from home, or maybe from office if office allows you, who are either retired or need a consistent source of income, who understand that it's a game of probabilities and losses are a part of it. It's not like that you will go and just win every time in every trade. That's not going to happen. So you should understand that you should have probabilities working in your favor before experiencing or making any experiments. You should have flexibility. It could be done from anywhere, provided you have a good internet connection, software, and access to a PC. The pros are that the market is around the clock, 23 hours every day except weekends. But we are going to trade only during the regular market hours, which are is there any problem in hearing me? I think Bobby, are you good now? I saw your message.
No, I
Yeah,
think
it's good.
Sabri, we can hear you very clearly.
Okay,
I will go on mute.
thank you. So free leverage and margin account up to 90%. You have to put up a very small money. It's very liquid and efficient. If you compare it with ETF, Amir Aziz is not here. He trades in ETF. Is very much fond of ETFs. But for ETF trading, ETFs are one S&P contract is $400 or $500. It won't make you a good amount of money. So you have to come up with a lot of money to trade ETFs. You can buy or sell in any order. You can go long or you can go short without any rules, any PDT rules, any share contract restriction, any uptick rules, which are normally applicable to the stock trading. You need to have a very low account values. You could start from $500, no interest charges or borrowing fees, favorable tax treatment of 60-40 between long term and short term on your profits, and leverage involved, but could make it exciting, but it also make it risky. So you could lose all of your account very quickly. Some cons as well, but it's hard to learn futures trading and be consistently profitable. In fact, it is challenging. 90% of the future traders are not profitable and leave trading in a few years because they think it's very easy. They just get into it, and when they start losing money into it, they overtrade. They try to get it back from the market, and they are not successful. They just leave it. And that leads to the psychology and emotional control, which are keys for success, but they are hard to master. Long sideways consolidation could result in impatient trading and poor setups. One of my favorite saying is from one person, Uwais Bukhari, who operates two businesses in the name of open trader and an e-mini player. And what he says that this is a strange kind of business, that doing less is more profitable. So unlike other fields or professions, if you work hard, you do more, you put up too many hours, you will get more, right? But here the patience is the name of the game, and many of time not taking any action is much better, and just waiting for your right time for right entries, and this which is counterintuitive to almost all of the professions which require taking more and more action. Margin and commissions. Different brokers might have different requirement, but this one is from the Ninja Traders website. For example, this you can start your account with Ninja Trader with $500, as low as $500. And then, but I recommend ideally if you want to start a good, you're serious in trading futures, especially micro futures, then you should have at least $5,000 to $10,000 in your trading account. Below is a diagram showing a broker's intraday and initial margin requirement. Intraday means, for example, if you want to go long or short buy a future contract, and in our case we like this micro e-mini future S&P 500. All you require in addition to a minimum $500 is $50. But if you want to take the position for the overnight and keep it overnight for next day, then the overnight margin will increase to $13-20. So example, if you want to trade 5 contracts at one time, you need to have $250 for that. And most of the time for the day trading, you will be there in the trade for a very short period of time, and most likely you will come out of the trade pretty soon within the same day. So any questions on this margin or intraday margin or account requirement before we go ahead?
Yes, Sabi, do you think that if let's say we carry on overnight, the margin is too high, or how much is this as a percentage of represents?
Well, if the notional value, if you remember, I said is 21,500 right here. For e-mini is 215,000. Micro e-mini is 1/10 of this, which is 21,500, around that figure. So $50 is how much percentage of 21,500? You can see that. And even $1,300 is how much of 21,500? Is less than 5%. So even then, overnight, they are giving you more than 95% of margin, and here probably more than 99% of margin. And the reason is too high is because of the exchanges. They impose a high value of margin because in the overnight session after the regular stock market close, the volumes drops down very dramatically and liquidity is not there. So my recommendation is that do not keep any micro or future position overnight, because market will be very slow. It's just
Sabri, how these e-minis futures settled?
How e-mini future?
First of all, good morning or good evening or Assalamu alaikum to everyone.
Walaikum assalam.
Sabri, e-mini futures, how they settled?
They settle? I couldn't understand, Babe.
How they settled, like, how they end of the day, how they settled.
Okay. How they settle? No. Even if futures expire, like we are, for example, currently is the month of February. Okay.
Yeah.
Let me go back to this sheet. So they are currently for ESH. This one is March contract, and this one is June contract. So this future will settle finally, close on the 3rd Friday of March, and this future will close on third Friday of June. Before that, they are not settled. Okay. Now, right now we will be trading this one because the volume in this. See the volume difference here. The volume in the March contract is 1.9 million, and it had only next one is just 21,000. So all the people who are trading e-mini March future contract, they are trading in March contract, not
okay.
June. Now, how they are settled, what happens, they are settled at cash value. What it means that like for example, tomorrow is the third Friday of March, and the period is closing for days. So what will be the value of the S&P 500 at that time? What will be the value? And what will be the value of your future at that time? The difference plus minus will be either credited or debited from your future account. That's how it is settled. You understand what I'm saying?
So yeah, I got that, sir. Thank you very much. But what happens if you don't close a
Yeah, this is what I'm
future
saying.
contract?
If you don't close, so whatever the difference is between the value of S&P 500 at that time, right? Let's say the
Yeah,
future closes today. Whatever the value,
yeah.
and whatever is the value of S&P, and whatever is the value of your future.
Mm-hmm.
Okay. At that close, both will be equal. Future will equal to the value. Correct?
Okay.
But you
Okay.
open the future, let's say 1 week in advance. So you open it in February and the future closes in March, or 1 month in advance. Now, so you open future at a certain value, and it is closing today at the value of S&P 500. Whatever the difference is your profit or loss. You understand me? At the end of the
Got
contract
it.
period, the future value will be equal to the index value, S&P 500.
So,
Correct?
so,
Okay.
so just as an example, let's say like a lithium mineral futures.
Mm-hmm.
Obviously, the things are moving towards electrified vehicles. So more than likely, in the next couple of years, all those minerals that are used in the automotive industry or uranium for nuclear purposes. So if you were to buy these futures ahead of time, knowing that the demand is going to outpace the supply, so there will be appreciation of those minerals.
Let's say talking
So
about
when
metals. Actually, we are just focusing for the
metals,
today's presentation just indexes, right? Like this, you're talking about
okay,
this metal, gold, platinum, and others, correct? Palladium, and there are other metals as well, correct? Now you have to see whether the futures are available. Futures are not available for everything, right? Like for example, in the metal, they are available for gold, silver, high grade copper, platinum, and palladium. At the at that time, at that time, uh, every future contract has its that this is June future, this is August future, this is October future. So you have to go and see the contract specification right here, and then see at what time, what is the future value, when it's going to be to expire. Like they have Bitcoin future, and then you can roll over that future. So it depends, but for the purpose of today's thing, I would like to focus the thing that we are just trading equity index futures, which are related, because the futures are hundreds of types out there, so we cannot trade everything. Specifically related to your question, what's going to happen at the time when the future contract will expire, whatever the value of the underlying asset is, like in your case, you say lithium battery or whatever, if there is a future of that particular product, the future value will equal to that particular metal's value at that time.
take care, some of you.
Okay,
Thank you. Thank you.
welcome.
हमारे तो ऊपर से गुजर रही है भाई.
Okay, okay. ऊपर से गुजर रही है? Who is this?
ठीक है कामरान, कोई बात नहीं.
I
You go
see a
ahead.
call from
नहीं
Masood
नहीं
Uh,
Hassan.
नहीं,
Sabri,
कामरान बहुत सिंपल है, अच्छी एक्सप्लेनेशन दे रहे हैं साबरी.
No, just focus on the. I don't receive any other request. Masood Hassan is calling me.
No, don't slow down for me. I'm just
No. I had just
no,
admitted
really.
it. Waiting room.
Sabri, did we talk about ticks and point value?
Yeah, we're coming to that.
Okay.
Definitely. So because many of I think nobody has here except probably you, Babe, uh, has traded in futures. Have you traded in futures?
No.
Okay, but at least you have an idea. So
Yes, a little bit.
Our next slide is on this. So for today's presentation, let's focus on just the equity futures, like the futures which are related to S&P 500, futures which are Nasdaq futures, and Russell futures. So we are leaving out all, there are so many others: soybean, corn, crude oil, metal, this and that, and grains and Bitcoin. You cannot trade in everything, right? You don't have infinite limit amount of money. So for the micro e-minis, let's say S&P is 4300 and it is moves to 43100. Micro e-minis value will increase by $5 for 1 point. Okay, with 1 point move in S&P. Nasdaq, for the Nasdaq 100 future will move $2 and the Russell will move $5. Whatever the Russell future market value, when you say the Nasdaq is, let's say, 14,000 at this point, it moves to 14,001. If you have a future contract open on the long side, it means that your value of the future contract will move by $2. And within each point in S&P 500, the tick size is 0.25. It means that for every point, for example, from 4300 to 4301, it can move 4300.25, 4300.5, 4300.75, and then 4301. Similarly, the future value will increase with every increment or decrease with every increment with 1.25 in case of dollar, $1.25 in case of MES. In case of Nasdaq, it will move, the tick size is 0.25, so it will move by $0.5, half a dollar. While the notional value is 21,500 for S&P 500 future at the 4300, the notional value of one future contract, micro future contract for Nasdaq 100 will be $13,000, and the notional value for Russell is approximately $10,000. So is that clear? Rahman, have I answered your?
Yes, yes, sir. Yes, sir.
Okay.
You were going very well.
Thank you. Move on. So what are our objectives? Our objective for today's presentation is to trade in these micro futures, either as a micro S&P, we call it E-mini S&P, other in micro and Nasdaq future or Russell future, to generate a profit of, let's say, $200 to $300 per day initially on consistent basis. And we want to minimize the number of trades to avoid broker commission, other cost. So ideally, my experience is that the market provides a good opportunity on average at least 3 to 4 trades per day. And if you keep your trading to a minimum, then the commissions could be or should be less than 5%. But if you overtrade, you want to make good money, then the commission percentage will keep on increasing and will exceed 5%. While this is the key here, we should always try to achieve a risk to reward ratio of 2 to 3 or higher. It means that you should not go for 1-to-1 a risky trade, a questionable risk to reward. You should, if the trade goes to your favor, you should earn 3 times your risk. Once the target is met, my recommendation is shut down the computer, move away from it, don't overtrade, because this thing is highly addictive in nature. You keep on looking at the charts and the market movements now and then you just jump into it. Oh, market is moving, let's go, make some money out of it. It's not going to happen. That's why the name of the game is to, in this case, as I said earlier, doing less is more profitable, and being patient is more profitable rather than taking more and more action. So do not overtrade. That's part of our objectives. Let's move on. Why future move intraday? I'm not going to read all the details. It's a proxy of market. So whatever is happening with the stocks and with the S&P 500, it will be happening exactly to the futures. In fact, futures are more liquid and future traders it's more easy to get in and out of the future market. So that's why most of the ETFs and the indexes and the traders, fund managers, they also trade in futures. And the future just move with the market, with the news on the companies, interest rates, regulations, geopolitics, analyst upgrade, merger, acquisition, whatever. Our job is to focus on intraday ranges. We should know whether there is a range left in the market or not, and whether the markets are moving or not. If the market are not moving, then we cannot make any money. And then second is to find suitable entry exits at a suitable risk to reward ratio to trade future contracts. We need some tools and setup. I have already discussed this thing in my last presentation on the stock markets, regular stock trading, almost the same setup. Here the brokers normally are different. There are many future brokers like Infinity Futures, Ninja Traders, Interactive Brokers. Almost everyone offers this product. We the one I have account with Interactive Brokers and E-Trade as well, but I would recommend if you are going to open an account, then open an account with someone who offers you good margin like Ninja Traders or Infinity Futures. I use a trading platform known as Sierra Chart. Its cost is just $55 with the real-time data feed. The data feed means real-time access, live access to the exchange directly, which costs you extra. The total cost approximately mine is $55 per month for the platform. But the platform is separate from the brokerage account, and many brokerage account will give you their own platform. Why I use a different platform? Because it's more professional. It has more features, and I have been using it for a while. But normally the platforms offered by the brokers themselves, they are basics in nature, very simple and basics and quick as well. They're not very advanced in many ways, but they do what they want to provide to uh, their users or the account holders on a minimum charges. You need a number of screens, at least two. Why? Because on one screen you will have your trading chart where you are trading. Another screen you will have the markets, how they are moving simultaneously, and it's hard to have everything piled up on one screen like your laptop. In fact, I have five of those screens. Every screen has some different purpose in my setup. You need to have a good internet connection and have a contingency plan in place, like there is a electricity outage or failure, internet breakdown. Then what are you going to do if you have open positions left? Because if you just leave it, it might run into, if the market is moving too fast, might run into hundreds of dollars of loss or profit one way or the other. So you need to probably call your broker and close the position manually. So you need to have contingency plan in place as well. Pre-market. Now before the stock markets open, since the futures are moving overnight, and why the future move overnight? Because let's say during the night time in US, but the Europe opens and the China is trading and others, so the global action is being taken place, and whatever is happening in overnight in overseas markets will affect some of the US stocks and US economy in one way or the other, and the future traders incorporate those changes into their perceived future values, and they trade accordingly in the global or overnight session. My recommendation is do not trade overnight session, because in the absence of when the stocks are not being traded, it's hard to determine why and how much the markets will move overnight, and the volume will be very low as well. But in the morning, we prepare, we review the overnight action, what is happening, are there any new ranges, levels being formed. Then we find some initial support resistance, and we update our charts with the support zones from prior days. I will show you how we do that. We analyze the market bias and structure. What do I mean by bias and structure? Currently, for example, market bias is bearish. As we all know, market is dropping, and so we have a short-term bias, which is basically applicable for last 1 or 2 or 3 days only. What happens within 1 or 2 days? And we have intermediate bias, and what was happening for the last 1 month or so, a couple of weeks or maybe one. And we have long-term bias, a couple of months or even 1 year. For the day trading's purpose, we normally don't look into the long term. We don't really care what was happening in 1 year ago on the long term, where it will go. What we really do care that what is happening today, so that we can, from some small move in the market, we can make some good money. and the market is moving because of stock markets. So if the stocks are moving, for example, if you're trading Nasdaq futures, and which are the Nasdaq futures? Here on your left side, these are the Nasdaq futures, and they are some S&P 500. Now these are the top 10. So for example, now what it means that in Nasdaq 100 there are 100 stocks, in S&P 500 there are approximately 500 stocks. With Apple weighing 12.72% of Nasdaq 100, Microsoft weighing 10%, Amazon 7.2%, and all of these top 10 combines 52.45% weight. While in S&P case, these 10 are 29% approximately. So if we have scanners and we know exactly what is happening in these stocks, and three or four of them moving in one direction, then Nasdaq will definitely move in overall in that direction because they have high weightage, correct? Similarly, in S&P case, there are 11 sectors like technology, like financials, energy. These are individual stocks, so we keep a track of where the sectors are moving. If we are trading micro ES or S&P 500 futures, then it means that eventually the S&P will move in that direction. But Nasdaq is more volatile and quickly it does move quickly because it has more and more technology stocks and its composition of 100 stocks, while S&P is a broader base 500 stocks. So just to give you an idea that how the stocks definitely will move the futures immediately, and so we need to have an eye on, keep a watch on the movement of the stock. Where are these stocks going in at one particular time in a day? All right. So we have a stock market scanner handy, and I also on one screen I listen to a running commentary or trading chat. It's a TradeNet. Normally they trade stocks, but they are watching the markets every time. And since it's coming live with a 15 or 20-second delay, so they are discussing market movement as well, and that gives you an idea. Okay, market is as futures because we're trading market, right? So how do we trade market? We're trading their futures. So we listen to them, and if they are trading, okay, they're discussing the market action and where possibly it can go, or is it stalling, or is it waiting for something, or is positive or negative, whatever. Then it gives you a good idea that what is happening over out there. What we do, we need to have good support and resistance zone. I'm sorry, resistance is not mentioned here. Support resistance zone from prior day, and from those zones we come up level. Like this is a sample future chart. You see these small rectangles, shaded area, gray shaded area. These are zones. So this is Nasdaq future. This is S&P. This is Russell. And these zones, they are normally when the market, like this is 24, this last Thursday, not too far away, right? And these were the zones which were based on the market movement based on the day before, 23rd, and sometimes ago, long term, maybe 2-3 months or whatever. Now you need to have some good zones in which you expect the market to move in between those zones. And for example, this particular market Nasdaq, it started like at 1:30 when the Europe opens. It was coming down, but it stopped here. And exactly at this zone, you see, it started moving up. Now, if you have already plotted these zones, you know market is now exhausted. It's come down to a good support zone, and you know how the market is feeling right now. Then you can take a position here, and then accordingly you can base your decision on cut out when it market approaches another zone. So this is exactly what is happening. It can again come on when the market opens on this side, and then it just find support, find some level. We'll discuss how, and then if, for example, it stop at this zone. If you are smart enough, you have experience, then you need to, without zones you cannot operate. So you need to have a good source of zones. That's one thing. And how do we get those support zones? Either you have enough knowledge or time to have those zones, or you subscribe to some service. So I subscribe to this service, for example, to the tick.com. Their charges are $29 per month for one market, but I have subscription to three, so I'll get some discount, and I receive this thing on daily basis. So on daily basis, like this was for February 24th, remember? So they based on this working, and they come up with these zones based on these things. Like this zone has this value area, this volume profile, this Fibonacci thing, whatever. You don't have to go into the details and pivot point, etc. And these are the zone levels. What I do, I have my own worksheet. I get those values here in the zones, and I see how much is their daily ranges. For example, this is Nasdaq, and this is the column F is S&P, and this is Russell. These are three equity indices market which I trade. So the Nasdaq on 23rd, its average movement was 454 for last 10 days, average of last 10 days. On 23rd, it moves 573 points. So the next day, I can expect something around this level between 454 and 573 for Nasdaq. But the next day, which was 24th, was highly unusual. So this chart shows you this is the average movement and this is the daily movement. And the Nasdaq is way above its average daily movement. What happened to the market? Because of the Ukraine crisis and the sanction, there was high volatility. On average, Nasdaq was moving something between 2 to 300 just maybe 1.5 months ago, right here. But as you see, the ranges have gone up. Market has become too volatile because of the interest rates, inflation, news, Fed decisions, and the Ukraine crisis, whatever, and which is highly unusual. Now, this volatility and this range gives you, or the day traders, a good opportunity that if you are trading these futures, then like these ranges are abnormal in case of in any case in Russell and this. And if we know the exact levels, the right level, then we get good amount of money. For example, if I already have plotted these support zone, Nasdaq is coming down, and I know it has a market is opening, it has a good support zone, it's likely to have some support just like it did before. And if I just move from here to here, this is 13,100 and this is, let's say, 13,020. How many points? 80 points. How much was the Nasdaq value on 80 points on one contract? $2, if you remember. So if I multiply that, I just one micro contract, and I multiply that 80 by 2, I get $160, just maybe less than 5 minutes for moving from here to here, zone to zone. And when the market opens, and all I have to put up how much? $50. That was my broker account for time. So if my brokers allow me, market opens and I see the movement, I jump into it and I ride the movement, and because I have some other tools here as well, like how the market is moving once the market is moving. Like this is a tick, it's telling you how many markets stocks are moving in positive direction, being traded in positive side versus negative side. Comparison of a like market, when it opened at 8:30, minus 2,500 on New York Stock Exchange. This means that 2,500 out of 3,000. Now generally 3,000 stocks are traded every day in New York Stock Exchange. Out of those, 2,500 were below their level from previous day. So it started at minus 2,500. But as soon as it started, the charts keep going up, and at that time at peak it was minus 100. It means most of the stocks turned positive, which was being shown by this tick at any given point of time. You see more in the positive side versus negative side. So the Nasdaq, and so was the S&P, and so was the Russell. Everything was moving in the upward direction. Okay, and that gives you an idea. And then with reading these sentiments, you can take a position at a good level. And let's say if we just see the Nasdaq moving, and we see everything is moving, if we enter here when the market comes out, and we move from 13,100 to 13,500 right here. So within an hour, market moves 500 points in one direction, which is abnormal. And if you take, even if you just trading one contract and you get 100 points in one direction, that is $200 straight away. And that's all we need. That's what our objective is. We cannot get market, catch market movement in every direction, every market movement. It's not possible. You start losing money. So that's why having these support resistance zone up front, and there are several sources, I use one of these, is very necessary. And any question before we move on this? Faisal, Rahman, anyone else?
No, fine.
I know it's a
Sab,
lot of material to absorb. That's why I don't want to go into too many details, because nobody can absorb so much details very quickly. But just to keep it simple, we need to have some good zones before we start. That's one thing.
Abri, Assalamu alaikum.
Walaikum salam, Masood. Yes.
Uh, I got a one question.
Sure.
You were showing the Nasdaq weightage. Do you have anything on S&P, like in terms of the companies? What's their
This is
weightage is like top 10?
Masood, this is S&P. Just yes, right in the middle. This is S&P chart number one, and I just show you this one. This right thing is S&P, SPY top 10. These are the top 10s for S&P. These are the top 10 in Nasdaq.
Great. Thank you, sir.
Okay, so these top 10 companies make 29% of S&P 500, total of 500 companies, and these top 10 companies in Nasdaq makes 52.45% of Nasdaq index, while they're in Nasdaq 100, there are 100 stocks, right? There are two Nasdaq. There's Nasdaq Composite, which is more than 3,000 or 4,000, 5,000 stocks, and there is Nasdaq 100. So we're talking about Nasdaq 100, which has 100 stocks in it. Okay.
Sabri,
Yes.
what is this channel for that commentary you're talking about when the market is open?
Right here. It's known as trading chat room. It's TradeNet trading chat room. I have it link in the.
Oh, you have the link. Okay,
Right.
excellent.
That's how it looks like.
Are they like you have to subscribe or
No.
they're
It's
free?
on YouTube free.
Oh, YouTube. Okay.
And they are, and for the futures, I'm quite sure I've seen it. There are a number of running commentaries and traders. They are live
Yes.
on YouTube. This is one
Yeah,
of
but
them.
I'm interested in one which you listen to.
Because they are trading in stock. So what they are not
Okay.
trading futures, but since they have market upfront, this is market S&P.
Yes.
They always have market, and they're always discussing market. So I need to know about
Oh.
the markets, and as well as I need to know about which stocks are moving the market, right?
Hmm.
Like Apple is moving, and Nvidia is moving, or Microsoft is moving, or they're not
Yes.
moving, or they're moving in the reverse direction. So from there,
Not that bad, but
I already have
amazing.
always have this thing at one place. Now this is another stock screener, and Faisal knows about it. This is Trade Ideas Pro. I think Faisal has a subscription. He was telling me on that. I also have a subscription to this, but this is paid. That was free. This one is paid. Now this one is one of their screen in which this is S&P chart is mentioned, which is ETF for S&P. This is QQQ, the same, and they have 11 sectors of S&P at one given time. So for example, at this time, this is technology. So in the technology at that particular time, Apple is here, the other time, but the chart is displaying you which stock in that technology has changed a lot, the most 9%, something like Adobe is 4.8%, and Motorola 2.9%. But they have less weightage, right? If Motorola has 0.01%, and even then if it moves 10% of its value, overall impact is negligible. But what you can see in a glance, okay, technology 52% stocks are down, but in the material 86% are down, because gold was down, material was down. The three aggressive sectors for Nasdaq are technology. This one is consumer discretionary, where Amazon and Google are there. Not I'm sorry, Google, Amazon and some others, Etsy, eBay, and this communication with Netflix, Twitter, Amazon, Facebook, Google, they are there. These three really they affect Nasdaq, and on a combined uh, outcome they affect S&P. And here you can see all the S&P 11 sectors. So that's give you an instantaneous idea or overall market where the overall market is moving. For example, I can simply say, okay, energy is down. 91% of the stocks in energy sector are down today. Only a couple of them, maybe this APA corporation and Has corporation, they were otherwise everything else was down. But overall, energy has just 4 or 5% of weightage in S&P, so it's not really affecting you. But if energy is down and financial is down, that means that these are the large cap energy and financial stock. But the small cap, they are more related to the Russell index. If these two sectors are down, they are going to impact the Russell index as well. And this is healthcare, this is real estate, utilities, industrial, which have to transportation, FedEx, UPS, and airlines and others. So this gives you a live idea of what is happening anytime, and the commentary is separate, right? Okay, so coming back to my presentation, I covered this. We covered pre-market preparation, stock scanners, trading chat
Not that
rooms, indicators. Now this is now getting more technical. We have those zones on our charts, but in addition we have some indicators which are because again, from coming from a technical background, I need to normally I'm kind of a detailed person. Not everyone needs to have all kind of indicators on their chart. What we need to do, if you note, I can go directly to my Sierra chart, okay, and make things a bit clearer for you. Okay, so this is 24th, right? Same day. This is Nasdaq future. So on Nasdaq future we have these zones, correct? From where these zones are coming? From that source to the tick.com where this remember I showed you that PDF document on my presentation where the zones were available, right? In addition to that, one critical zone indicator is this VWAP, volume weightage average price, and this tells you that this blue line, and this is this blue line. This tells you how the market is being traded. If the market is being traded above this line, the market is bullish in general, and the market is being traded below this line, this blue line, the market is bearish. So from the 23rd, for example, the entire day market was dropping, correct? It start from the right from the very beginning, 8:45 towards the left, right here, and keeps on decreasing, always below that thing, and this slope was getting steeper and steeper. But here the market closes right here, so you can tell you that this is a bearish day. On the other hand, next day market was completely different market, and it jumped and then remained up for the entire day, for the whole day, and above this blue line. So this is one of the indicators known as VWAP. There are some other moving averages as well, like for the short term period I have this 10 period EMA, exponential moving average, this 34 period. Here is MACD, but I use a slightly modified version of MACD. It's known as PPO, and this tells you that market has momentum in it. The short term moving average is always of a signal, is green, is rising over, so market has a positive unless it starts coming down. So on this particular day, previous day, you see the reverse action on this thing here. See the chart at the bottom, it was it's always below zero. This is zero line. Most of the time it was below is the signal line, and it's coming down and down, that's showing the market momentum. But on this particular day, on 24, most of the time is green, but above zero as soon as the market jumped, and it remained above this. So this is all telling you the market momentum and the direction. And this one is volume. See the volume of opening. So what happened on the 24? I keep coming back to 24. Reason being, on 24, immediately as the market opens, you see the volume jump. It was all green. You see that this MACD or PPO trend positive was green. It just crosses this. Now, in the morning, we read what market was doing overnight. So the market was dropping for the whole day, 23rd, and prior to those days. If we go back to the daily time period, and that's interesting. I have this daily here. Let's see this daily chart. Sorry, my charts are not configured for one screen actually. So I can move to this daily. Hold on. This thing is getting messy and will confuse people. So just give me a second and let's pull up a clean chart. Okay, so this was again Nasdaq. Can you see it? Hello?
Yes, brother Sabri, I can see it.
Oh, Babe, loud. Okay. All right. Okay, so this is a daily chart for Nasdaq. And as you can see, market was keep coming down and down and down. So this is 24th, right here, this one. So what happened? In the opening, we know that the market was at this point, and we knew the market was coming down. So the market was in a bearish note, but it extended. It was extended. It came down to 9. At any given point of time, it can jump. It can jump up to a position to acquire a previous position. So we were ready for that. It could happen. Correct? Number one thing. Those people who watch the market all the time, they know it can happen. Now, if we go back to our regular chart, this messy one, and let me pull out a 5-minute chart. And if we start from here on 24th, this one, I move to a 15-minute chart, so to cover at least 1 or 2 days, or maybe 30 minutes. I'm just changing the chart period, 30 minutes. So we were here at this point. As soon as the market, now, overnight the market was trading, it tried to come down, and look at the support. This area provided support. We already have it plotted, so we knew the market is going to bounce from here. The market came back, went up, tested this volume weighted average, that blue line that I talked about, and then from there, you see it came back, tried to become bullish, could not succeed, came back, and came back to the same zone, and then went up again. So if in the morning I'm starting here, this morning is 8:30, I'm starting here, so I see this price action. Okay, market has formed a small balance area, trying to balance in this area, here to here. Tried to come down further, but was too extended, could not come down. This is overnight action. Tried to come back here, could not come. So it is just trying to balance in this range. Now it's very risky to get into this zone any given time. The market is trying to balance itself. If I just buy a contract here, you don't know, market will come down. If I buy a contract here, you will know, market will go up. So what to do? At that time, best time strategy is to either wait patiently for the market to come down to a good support level, just like it here, or come out of this balance with volume. So as soon as the market opened here at 8:30, it came out from this zone with volume, and then just rush it. So we were waiting for that. We saw that the volume coming up right here within 5 minutes of time. We saw that it's coming out of this thing. We knew that it was way below its normal level. So we could expect that this.
I had a question.
Sure, go ahead.
I have a question. Stay on this chart.
Yeah.
The light brown shaded area
These.
that you have.
These.
Yeah, just move your cursor towards the left side. One of those red bars. Yeah, no, not that far out. Stay within the brown shaded area. So let's say if you were in the front end of that brown shaded area, and you don't know how the future is going to pan out, and if you are trying to isolate a zone, what would be your strategy? Forget about anything that you see the vertical bars from that brown shaded area, and you had to make a call whether you wanted to buy a future or not. So what all the Nasdaq stock and S&P stock are traded red, in the sense they're coming down based on the PowerPoint slide number 15, the lower left hand boxes that you were showing for each individual stocks. So if obviously it looks very promising that the historically the stocks are trading very low. So you are, intuitively you're thinking that, you know what, this is going to bounce back. This is going to bounce back because historically it's coming down, and all of those individual stocks in those indices are traded very low. So, but you don't know in the next brown boxes how further down it's going to go. So if you are in this predicament of making a call for the buying a future, or moving on to the next what do you call box or a zone, how do you make that call?
Hold on,
That's
hold
what
on.
I'm getting at.
First, let's talk about one thing. We really don't care that what overall market is, whether the stocks are down or stocks are up, because what is your time frame here for trading? Time frame means I'm not bothered about that I will buy a stock or keep it with me for 1 week or 1 month or 1 year or 1 day. All I'm bothered about is trading this in other words, buying or selling or buying in reverse order. I think Faisal has dropped out. Yeah, he had to go. Anyway, trading in a very short given period of time, maybe half an hour, 15-30 minutes, because my objective was to generate within 1 hour or 2 hours $200 to $300 of profit, and that's it on consistent basis. So that's one thing. We are not looking at anything long term. We're day trading futures to have some side income in a very short period of time. So that's one thing. But keeping that time frame in your mind, you need to understand that every zone is being watched by traders like you and me. So how the market is approaching that zone is critical. At what time? For example, here market is started dropping. At this zone, it is started where the cursor is, these two lines, the crossbar. Market is starting coming down. And when it happens, when the market opens on 23rd, immediately after the market open, market come to this resistance zone. Now ideally, every resistance zone should create some reaction, number one. Number two, we should have as part of our preparation on daily basis, we should have that bias on our hand. The market is short term exhausted, is short term bearish, is short term bullish, whatever it is. Here the market was short term bearish. The action was bearish. It tried to last day come here, but came down. Overnight it again tried it on a higher side, and then it's again trying to reach. Okay, fine. So we can try right at this zone, we can think, and that's the risk here. But if you don't want to go there, you probably could wait and started the market's reaction, see if it come down to this VWAP and these two moving averages. Then I have a proprietary indicator which will start telling you the market's downward trend has started, which is these light orange shaded areas. Then you can initiate a position because your bias at that particular time is bearish, given the overall market's action in last couple of days and overnight section. And you could easily expect that market could test this thing, this zone, which exactly it did. See, it came down. Since it's a last time it popped up here, and also it's a support zone given our preparation. So we can expect a market reaction here, and we can simply take our position out here. Even if I catch the market here at its starting is this downward move, which is 13960, and I got out of this 15 minutes later, just 15 minutes later, no, 45 minutes later, which is 13723. You know how much is that? That's 230 points. 230 times 2, if I just have one contract, $460 in those 45 minutes. Now, to coming back to your question, that will come with your experience. That why a market will have some reaction here and why market will have some action with here. It depends upon analyzing the markets and its bias. So we, for example, let's start this day. Market has come down too much time here, so we really don't know whether the market will continue its journey downwards, which you ask, that or market will come back. We don't know, right? Nobody knows about future, no? But what we do know, given market's behavior, that it's already at the bottom of the level, and in a short period of time it has traveled a lot, correct? We call it short-term exhaustion. The short term is exhausted. Overnight it tried to come down further here, and before market at 7 a.m. here, but failed here because this zone provided support zone, very strong support, and we are at the bottom of the level. And then as soon as the market opened with a high volume on the positive side, it jumped out of this balance area which we was trying to create. And when it comes back to our strategy here, which was my next slide. So there are two ways to trade the market. What is our trading strategy? We need to have a first of plan for every trader. And the part of plan is that what are our zones are, what is the bias, how do we assess the bias. I will come to the plan. I will come back to the plan. And there are any given day there are two types of market. One is trending and one is range bound. And 80% of the time market is range bound, even more. So the trending market jump onto the, our strategy is to jump onto the trend wave either initially or on a pullback to ride the trend till it continues. And the range bound market take the reversal position at a strong zone support resistance and avoid taking positions in between, especially in a given range. So keep that in mind. There are only two strategies. One is for trending market and one is for range bound. Now we come back to this chart again. This was a range bound thing, correct? Towards the end of a trend, this was a downward trend. Market was trying to balance again, creating, but in a range it was not being succeed. As soon as it came out from this particular narrow range with the high volume in one particular direction, and our indicators telling us that this is showing you momentum. That is the momentum coming out. This momentum will push it forward at least to some distance, and that's all we need. So initially we were not thinking the market will go all the way up to this. This is highly abnormal because of the high abnormal ranges which we are witnessing these days. So this is kind of a trend market. First trend downward, balance, trend upwards. Within this area, this is not trending. In this area, you can think of trying to find a support at a good zone and exit again at a good level like this VWAP or this particular level. So this is complex. That's not easy. I would say that it comes with experience, with analysis of the bias and the structure, and then only you can think of, okay, this is the right place to give a call or not. Wasim Sayyed is left.
So Sabri, I mean, my read on this unusual anomaly that we had on Friday was probably because of the liquidity or maybe sell-off in the Asian and European market, and the more stable market would be the US. So certainly the surge of the green zone is because of the infusion of capital from maybe all over the world into the US stock market because of the Ukrainian instability and of course the economic sanctions that being placed over there, the US seems to be a best bet to park your money at least for the short term.
Actually, again, I want you to shift your focus. I really don't care. I really do care because I invest in stocks and other things. But here we are day trading our micro futures.
No, no, perfectly. No, I
So
think
we
that was a
really don't
tangent
care
to
what is
the
happening or what will happen. We
exactly.
really do care. Okay, in this short period of time, from here to let's say
Sabri, can I
Monday.
interrupt you for a second, Sabri?
Sure, go ahead.
Wasim is requesting to let him in into the market. He's
Yeah,
waiting
I
for
did. I
long.
did. Wasim is here.
Okay, okay,
Wasim is
okay.
here.
Thanks.
So Sabri basically आपके
Assalamualaikum
दो
guys.
दो 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 हैं, तो जो बाउंड वाला जो है बैलेंसिंग रेंज
Mm-hmm.
जो कि है जो कि लोअर लिमिट डिफाइन करता है आपका,
Lower B and
उसी चार्ट
upper
पे
B.
रहे.
No, no, both. Lower and upper.
Right,
Reversal. That's why we're talking about reversal position at a strong support and resistance zone.
right, and then trending piece of it.
When the market
So
is in
it's a
trending
good
mode,
explanation.
when the market is in a trending mode, it probably will blast through those support zones, resistance zones, because there's too much of volatility and too much of strength in one given direction. So it really won't care about your zones. But ultimately, it's going to stop in any direction, right? It's not going forever in one
Right.
direction. And when it stops, it again stops at some zone.
हाँ बिल्कुल.
At some zone, not before that. That's going to happen. So what I was trying to say, okay, talking about this Thursday action. So market, if you, since we are discussing market here, to answer your questions, I'm sorry. On this was daily. This is S&P, and so see, this was the S&P action right here on Thursday. This chart is not updated because I'm offline now. Give me a second. Actually, there were too many things here. I wanted to keep it simple for you guys. There are too many things on this particular chart. It's making it messy. In any case, so we already knew the market has extended in one direction. Does not mean that it is guaranteed that it will come back. Number one. But we, on a short-term basis, we could expect that the market can make any move, especially in the reverse direction. And where will it move? If we at a particular strong supports resistance zone, and after it will create a short trading range, and then only then when we saw this high volume in one direction and high momentum, then we came on board on this. And right here, if I just go to the very narrow chart of 1 minute, now we are looking at 1 minute action. Sorry Wasim, we probably late, so you probably miss this is 24, the early part of the presentation. Here we go. Okay, so in the morning market, this is 24 here. Okay, so again
ये आपका सियारा सॉफ्टवेयर है ना?
sorry,
ये आपका सियारा वाला सॉफ्टवेयर है ना?
Sierra. So market came here, and then this is night action, right? 2 p.m. Then remember it tested the VWAP, it came back, so it will again come down in the morning. Here it is coming down, again tested this level. There. Again tested this level at 7:30, and then it did not came back. As soon as the market opens, this was the range I was talking about. It opened at a high volume with your MACD or PPO just going up in this direction. Rahman Babe, okay. And then it keep on traveling it in this direction. So where was the first resistance level? Here, but it tested it overnight, so it really did not care about it. But at the VWAP, it came back. It found resistance, came back, and then it again blasted through it. So that is telling you the market is very strong at this particular time. And what I do care is that in one particular direction I want and see it stopped exactly at this resistance zone. It came back again. Now the market was bullish, so it did not came below this VWAP line, found support and again went up. So that's how market move. Even when the market is very strong or very weak, it find good support resistance, and then again next time it stop at this zone. It came back again at this zone, it found support, went back, and then again tried to cover this, could not succeed, came back again. That's how market moves. All I'm saying is that we should, when you trade futures, and for that matter any market, even stocks, you need to find good support resistance zones, and either you have enough knowledge and time to do it yourself, or maybe you can subscribe to this service for Wasim. If you haven't seen this, Wasim, are you there? Can you confirm it? Something like that. And this service provide you
Yes, I'm here.
support resistance zone. All you need to do is just link your chart with that, and then it plots the support and resistance zones for you. Now, how good or bad, you need to have experience. You need to, with experience will come that with the supports of is market has exhausted or not, or market will go into one direction or not. Then you can use others' commentary and the market bias, and then you can come up with some good trading action plan. All right, so we discussed that we have volume weighted average, we have moving averages, percent oscillators. We in addition we have daily pivot points, and the pivot points are automatically calculated by your charting platform, and the charting platform plots it on your charts, and that's how you plot it, and then you those add to your already existing support and resistance zones. So the trading strategies I will discuss that we should have a plan. Fine, you should identify what kind of market you are in. Is it a trending market? Is it a range bound market? If it is a range bound market, then what are the ranges you are talking about? And then you need to work around your strong support zone and support zone, resistance zones, to find good entry and exit points. Either you can go long or you can go short at any time. I'm not going to go into these are too many details, will confuse you if you haven't done it. I don't want to do that at this point of time. Simple as that, it tells you exactly how to assess the market momentum and direction at one time using those indicators, and then apply those to your charts to get. Now there has to be some good risk management rules and exits. Number one is to protect your capital. It's very easy to be on the wrong side of the trend and lose your capital. What we do, we have decided on the basis of this table that okay, if we are going to trade the micro E-mini, the maximum we can trade is 5 contracts maximum, with a stop loss of 5 points. The maximum loss we are going to incur is $125. Target should be 15 points. The risk to reward ratio is 3. This is what we're trying to achieve, and target is $375. Now the micro E-mini, either we can trade 2 or 3 depending upon our account size and risk appetite, with a stop loss of 20, but this 20 and this 5 can vary considering the volatility which we are experiencing these days. So the maximum loss is in this range, and maximum gain for one trade is this range. Targeted trade, not maximum. Similarly, we can also trade the futures of Russell, and this is almost same as the S&P. Any questions on this position sizes and range? These are very important, because you cannot have a large quantity and an anticipated large loss and a small target, because we are always targeting a high risk to reward ratio of 3 or more. Before that, it's not really, I would say, worth it. that if you say, okay, I'm targeting if I can lose 125, but if I get 150, that's fine. No, that's not fine. You should always go for a higher risk to reward ratio. So that is here, risk to reward ratio of 2 to 3. On our way in one direction, we can take some early partials, so we feel good and reduce our exposure, and then we can move our stop loss. Next partial either should be taken at predetermined level. We should not allow, once we are making a good profit, to turn back and end it in a loss. In fact, there are only three. There should be three outcomes of a trade. Either you make good profit of it, out of a big profit, high risk reward. Either you make almost no profit or close to zero, or you should have a small loss. You should never in any case have a big loss in any case, and that's our rule number one: protect our capital. In one trade, we should cap the maximum loss to only 1% of total trading capital. Ideally, it should be 0.5%, and we should cut losses earlier. Do not overtrade. I repeat, do not overtrade. It's just for the heck of it or remain straight. And last line is probably not clear here. Maintain a psychological journal, which is very important. That at that time, what are you feeling? Consequences, action. Any question on this thing? I know it's a lot of material. I don't want to spend too much time and go into too many details. I can give you the presentation, but it's not easy, and it's an ongoing journey to learn. Any question on this?
No, this is excellent. Thank you.
Okay, so what I do, I have my own trading plan, and I have set up some rules on that. For example, I'm not going to trade after hours. There might be some exception at time it really work. Again, 2 to 3 contracts, that's the position size table that I showed you. These are the only markets that I'm going to trade, and there's, because these markets have higher liquidity and there is good response at zones. My own experience tells me that reversal setups versus continuous setups work better. Now, what do we mean by reversal setup and the continuous setups? Continuous means you have a tendency as a human being, like market starts moving here. Say, oh, market is moving in this direction, let's get some on board. Let's get an entry here. Only to see market reverses at some place and they come down and give you a loss. That's a continuous setup. Because again, human psychology comes in. And we fear that market is making a big move and fears of missing out, and we'll miss this opportunity. Well, our opportunities will come back. That's why patience is the name of the game. For example, consider at this point. Can you see this, my cursor? This point. Is it a good time to enter? Market has already moved from this to this. It's in the middle of the zone. And market has a strong momentum. Yes, it's showing, but momentum will slow down eventually. So is there enough range left here? Not really. And do we have good support zone in the back of our entry? Let's see, we are jumping here. No, we're not. So is it a good time? That's a continuous setup. It's not a good time to enter into a zone. Although market might move in this and you might have missed out, it's fine. Because most of the time market will find some resistance. This has already covered a lot of distance. So in short-term exhaustion, it will come back, find some good support at good place, and then again return back. Now let's say market is starting coming down here, and you say, oh, market now is breaking down, right? It was here, it came down, so market has turned back. But see what happens? Market again always deceives you. Find a support at the good zone and then came back. So my experience is this is a reversal setup, that you assess the market situation, whether the market is short-term exhausted and is about to turn, or whether it is at a good support or resistance level. And then, unless you are in a very strong trend, for example, right here we are in a very strong trend. As soon as we came out of this initial balance area, the market just opened, we have high volume, momentum is picking up, so it's likely, and again even then it found resistance at this VWAP level, it came back here. So there's no point in just chasing the market here, 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 here. You have to be patient and let it come down to good support zone like this point. Like here, it came down here again, and it's because the market was bullish. So this is a temporary pullback. So let's say instead of here, you make a long position at this point, and all you need, you make a position here. Market reaches this zone, but this zone is no longer relevant. Why? The market has already achieved it and crosses 2-3 times, so it's not respecting this zone. But next zone, yes, it might be. So all you need to do, find good zone. Even then, if you go long here and go up here, that is 150 points. And we were thinking of trading. We were thinking of trading 2 to 3 contracts. So let's see if I have 2 contracts, right? This was how my position table was telling me. 2 contracts, this one, or 3 contracts. Let's say we are keeping it very small. 2 contracts. 2 contracts, and how much range from this zone to this zone I have covered? The 13, 13, 10, 13, 320 is here. The 13, maybe 13, 10. We came out here with 13, 4, 5, 6. Is 130 points per contract. I have 2 contracts, 130 times 2 times 2. That's $520 in how much time? It's 9:45 here and 10 minutes. Because the market is moving like that, but we need to be patient and look at the right point, assess it, and then based on understanding. So my problem, for example, is that I'm always not very good at this thing. In other words, being impatient and try to chase the market at the wrong time. Because I always think the market will keep on moving, but it will. But if it is exhausted, it will come back, find a good support or resistance in case if it is downtrending, and then come back. And this I have seen it over and over again. So in my experience, we were discussing this thing, the reversal positions work better than, sorry, we were on my trading plan here. That use reversal setups number 4 versus continuous setup. This is one of the rules. Only trade when a minimum of 3R raised to 1:3 raised to reward ratio is available. Minimize the number of trades. The more you trade, the more you will lose. What you need to do, you need to find good entry and exit, being patient. Do not trade in last 30 minutes. Normally in last 30 minutes market turns crazy. There are too many orders, people are buying, selling, they're trying to get out, trying to get in. So the normally market do not respect zone during last 30 minutes. You should know what is the volatile intraday period, such as midday when the Fed is announcing something, market just slows down and then it starts moving violently. You should know that. And then during your pre-market preparation, you should understand what is your daily bias. Is market is bullish, short-term bullish, is it bearish, short-term bearish, or it's neutral, it's not doing anything. And one thing we should do, that we should have all these 3 markets available with us one time, like this chart which I showed you earlier, and we should know, okay, if we are trading Nasdaq here, and we're trading, this is S&P and this is Russell, what other markets are doing, because markets are interconnected. So what Nasdaq is doing will affect S&P, and what Russell is doing will eventually impact S&P and to some extent Nasdaq. So that was the crux of the thing. I did not go through the entire presentation word by word and line by line, because I think it will be too much material for people who are just starting to explore it, and I do not want to overwhelm you on this. But these are very important. That's why people start losing positions here. So we can come up with some chart examples unless you have some questions. Anyone or any questions so far? Please go ahead. Haven't heard anything from Kamran, Shahid, Mubashir. Have I confused you people?
Just sorry, this is Mubashir.
Yeah, Mubashir.
Just getting inspired by your knowledge and in-depth, studies of the market, and It's an eye-opening, session actually. The way different segments within the this market could be explored and utilized. But really appreciate your time and your knowledge
No,
being
no problem
shared
at
with
all. No
us.
Not
problem at
that
all.
bad, but
It's
Yeah.
not amazing.
because I've been doing it for years, and I have learned it hard way. I have lost a lot of money in this process, but I have taken the courses and work, and I still
21.
listen to them because what is market? Market is is a collective behavior of millions of traders out there, and what is all? Every trader is a human being, right? Although there's algos there, and machines are trading on our behalf, but who have made those algos? People like us. So it's ultimately is boiled down to what human psychology and emotions. That's it.
And that's what I'm trying to grasp. When you say market, this word itself, quote unquote market, like
Correct.
who is the market? Like we are the small players, like if you, me, anybody else going into this market, but the big players who control the market, and we are trying to get some part out of that, controlled market, and that's what we're trying to get.
Correct. Correct, Mubashir. Exactly. Market means the overall, but you're right. One, if you trade one or two contract at one time, people like we want to make a difference. So what we need to do? We are not moving market. We're just trying to assess what the market's bias is at this point of time, and where is the market moving, which direction, and if we can
Right.
get something out of it. So we cannot never fight with the market. We cannot turn the market. We cannot change its direction. So what should we do? All these things are is to assess the market where the markets are moving, and that
Yeah,
needs a
exactly.
lot of knowledge as well as a lot of patience as well. So for
Yeah, no,
example,
I think I see it the way, when you have windmills and you have the wind is blowing in a certain direction. I mean, you can't fight the wind, but you're trying to adjust your sails to harness the power of that wind, which direction the wind is going in.
correct, correct, and part of that is try to understand the market is not doing anything at this time. It's just consolidating, or in other words, balancing in a narrow range. And at that time, we should find, okay, fine, the market is balancing in a narrow range. This is the time to enter. And for example, here the market is going up, down, up, down, up, down. This is night time, by the way. And the night time, sometimes very interesting. Now, what this is Wednesday, 23rd, 3 days ago. What this chart is below is showing you, your MACD or your PPO is weak, is less than zero. Correct? So you're not in a bullish mode. Had you been in a bullish mode, your MACD should have been above than zero. It was going like this with increasing slope, just like it did on Thursday morning. So we are in a bullish mode. At time, it's trying to go up, but it will come down unless it is crosses this zero line and it crosses this V blue line. Then we can say the market has turned bullish for a short period of time. For a short period of time, does not mean that it cannot come back. So what market is doing here in this area? It's just trying to balance itself in this small narrow range. Eventually, it will come out of that. So it does it make sense to make a trend here or here or here? Not really. Correct? Not really. But this is interesting. Market is weak as we see it. It had come down during the daytime, throughout the day, and then again it came down. Then it trying to come back again, and then it has a zone here in front of it, right here, and we have plotted that zone. So that's the reversal setup I was talking about. Now, does it make sense to make an entry here? Anyone? It does. Forget about a moment that is night time, because our rules say that during look at the volume in the night. How much volume we have right here? Hardly any volume compared to the daytime. Maybe 110, 120, 150. In any case, for example, people outside the US, they are in Middle East and Pakistan, this might be the right time because that's their daytime. Although they have volume, but they are patient. They say, okay, we can wait for 1, 2, or 3, 4 hours. No problem. Fine. Market has come down back to this. Is it a good time to make a reversal entry? Anyone? Any idea, Mubashir? Anyone? Wasim? Rahman?
I'm not sure. I
Okay.
don't know.
Considering the price action the day before, it was bearish. This light orange shaded area telling you is bearish. These red line, this is 34 EMA This is VWAP. So it has to find a resistance at VWAP. Fine, in any case. You see, it find resistance here at VWAP. It find here is because it is bearish. Its PPO is negative is less than 0. Correct? And now it's trying to come back and this fine cross this VWAP fine, but it has a resistance zone, and the zone its resistance. So does the market have enough strength to just come out and just boom go ahead? We don't see it. If it doesn't have enough strength, then it should be, the chart should be is like this. The PPO MACD should be above 0, going like that. Right? You see this at the bottom? It's not. It's weak. And at this weak time, it has come to a strong zone. So most likely the zone will hold and will give a reaction to the market. Because there are people like you and me who are watching this thing. They say, okay, market has come out of this balancing area, and then when if market fails here with the probability, again it's a game of probability, then this time it will come back and test this again. Right here it did the same thing. It tests this zone. This zone also created reaction. The market went up again, but again came down. Things going around according to our plans. It tested this level again, and this level now is trying to support it, but it failed. And these red lines are telling us the market is in bearish. This is 10 moving average, this is 34, and market is under this VWAP. And these orange area telling, do you see any green area here like this? No. Green areas here, market tells me, that's my proprietary indicator that tells you that you are in a short term, long term trend, and this tells you that in a short term trend. So here your green area was there, then there was no shaded area. It means the market is trying to balance it out. But what are the chances? Because everything is coming down, and then this was on the upside. We already made a good move, so the chances are that market will break this thing right here and further come down until it find a good support. Now at every support zone, this zone created some kind of reaction. Market came back, popped up, then it came back. Then market was too weak, could not find support. Again too weak. But ultimately market will settle down somewhere. Correct? Somewhere. So you need to decide, okay, you want to carry on, or you want to hold, or you might have made enough money. Ultimately you find that market has come here, again come back, if you are patient enough. And here is market is trying, this thing has become from red to blue. This means the market is trying to hold back. This could again fail, which it failed, but you have already made good amount of money. If you entered, for example, again 2 contract at how much time, 13,462, and you decided that's enough, let's get some good profit. It's 13,179, or maybe 13,162. That's 300 point. 300 times 2 times 2. 2 contract. Each contract has $2 value. That's 4 times 300. That's $1,400. That's $1,400 for how much time? We entered at 1955, and we at 21:35 in 1 hour and 30 minutes. $1,400 worth of money, which you can earn from here, just by being patient for 1.5 hours and understand the market bias structure, and is because these things are guiding you. Okay, this is totally bearish at this point of time. Now, when you enter it, how much was our stop loss? $20, $80. So I risk something like, here I can say, okay, this is a midpoint. Midpoint is another good. I say, okay, let's have a strong stop loss. Maybe 13,505. This is $40. 40 means 160. So I risk, for example, my stop loss was $80, right? 20 points. So I risk 80, and how much I earned? 1,400. What was my risk to reward ratio? 80, 1,400, 1,400. How come I arrived at 1,400? That's a 17 hour risk. 1 times 17. So I risk $80 and I earn $1,400. This one trade can make a whole lot of difference. Even if you lose 4 trades like this, 5 trades like this, you will lose $400. But you earn $1,400 in one trade, in 1.5 hours. You got my point? But you need to be very patient to get a right entry. And this was a good reversal setup. I was talking about a reversal setup. Market is not trending, or if it is trending in at this time, it's trending in this direction. Over here, I can say the market is trending because I have this shaded area, my indicators and the PPOs and the MACD is coming down. Over here, I cannot tell you. Market is just trying to balance this. But again, since we have understanding of the market, so we can say, okay, market was part of this trending down, and now there is no trend, which means it's balancing. But when it come out of this balance, it will continue its journey. And where will it stop? There are some ideas. It will stop at a decent level, and there are ways to approximately calculate that how much distance market has made and how much where will it stop. For example, yesterday, Friday, okay, market open, but at the high, but it already covered a lot of distance, not discussed yesterday's action, Friday action. So we are 5-minute charts. Let's move to 50, make it 15 minutes to cover more area. Okay, this was Thursday. Market stopped here, and for the entire overnight session, there was no trend here. And remember, we do not trade in overnight section most of the time. Market was trying to balance, slowly come down. Again, it finds support just at the bottom of this zone, and then it finds support. It started distance again. In the morning, where did it stop? But in the morning, let's see. I start preparing at 7:30 in the morning. So I saw it yesterday, by the way, and I took position. Although I don't, the market is coming down to this strong zone support. Why is it strong? Because being tested for the first time. It was not tested yesterday. Day before yesterday, it was tested in 22nd. So this zone is, and market has covered a lot of distance as well in one direction. So even for a short period of time, market will definitely pull back for a while. So that's a good point to make an entry, correct? So I took a small position here, and I said, okay, fine. When market was coming, I said just came out because I did not know the direction. Stock market was not open. But market continued, and all the way back to this zone, even below this zone, some previous zone which it developed right here in the evening. And how much had I been in this trade? This started at 411 and 13,000. Sorry, 14,111 and 13,865. This zone, that is 140 points. So if I just again 140 times 4, that is $560 straight away. And all I did, by the way, I did not earn this much money. I just stopped out here. I was not expecting market to come all the way down here. So all I knew the market was coming to my resistance zone, right? I have already developed those resistance zone, and it's probably is going to bounce from here. At that time, market was slightly weak, so it did not bounce here. It went further below it, but ultimately it bounced, found support here, and then it reversed its journey. Now, what point I was trying to mention here, when the market opens, it continued its journey, it went past, but there are ways to analyzing how much distance it will cover, and it exactly stopped as 2 times first hour high. This was first hour high somewhere here, this was 2 times, and it stopped here. And for the whole day, it was just chopping around. This, up, down, up, down, up, down. Now you think this is a good time to enter? Obviously not. Why? On my 15. See this arrow, this color, this is telling me the market is an upward trend. As soon as the trend ends, I don't see any trend here. Right? There's no colors. My indicator is telling me. Although the PV is positive, but it's just almost flat, slowly coming down. But eventually market pulled out of this area and towards the end. But this was Friday, and Friday are always slower. And at this point, it ended the day. So what I'm saying is that if you just be patient, put support and resistance zone, understand the market bias, structure, its movement, and understand whether the market is bullish or bearish or not, there are good opportunities out there. And even though if you lose money on a couple of trades and you keep your stop loss to, let's say, $80, but if you get one of these, one of these trades, which I just explained, and this is Nasdaq by the way, and you can get like this is 7 hour, and this is huge. You risk $80, you earn $560, which is 1:2 times 7, quite huge, and that's worth it. And then what was our target? Remember, our target was to earn $200 to $300 a day. That's it. So if you just in let's say 1 hour, you are, and most opportunities are in the morning session, because in the lunch session markets always get slow and start trading in an average, because the traders take time off. They for the lunch they go off. Stocks trading also slowed down. So you can always spend, if you have some time in the morning or maybe in the evening, 1 or 2 hours. Look for the good support zone and the reversal point. Take those. That's one way. Other way is to wait, and if you sense the market is not in a narrow range anymore, just like here, and it is going to has high momentum, which is being shown by your charts and your indicators, and it's likely to continuous direction one day, then you could be a bit patient. And as long as these indicators are telling you, you can be in this. And when you find that okay, I have made enough money, don't try to be too greedy. For example, if I realized that okay, I on this particular Thursday, the market started its movement. We came down and got on board at this 150, and we stop at this zone, which is 13,450. It's $300, 300 points, 300 times 4 for $1,200. But that's the opportunity. On the other side, flip side, if we ignore this momentum, right? We say okay, market was bearish, right? Market was bearish, yes, right? And we take a short position, the reverse position. This is market will come down. This is a zone, fine. And we just went away, and we came down and found market here. So how much money we have lost? $1,200. So we should not allow that to happen. That's why respecting your zone as well as the these stop loss is a key. You should not incur large losses, and you should go for large movement and high risk to reward ratio. So that's the key here. So guys, I'm not going to take a break because I think I have already discussed the charts with you, which I thought. Just to give you another example, for example, Russell on this day. Let's see another index market, which is Russell. Now I have started liking Russell recently for many reasons. Because in my experience, Russell also, although its ranges are not that far stretched or wide as that of Nasdaq. And remember, in Russell, there is only one $5 contract. Look at the price action of Russell. Now, probably you have understand. If you don't, you have any question, please come forward and ask me if you don't understand this chart or whatever. So, overnight session, Russell find support on this number of time. Let's say I'm starting my morning session at 7:37. So I am here. Okay. As a rule of thumb, I do not trade in Russell or in any market for that matter prior to trading. But we saw that Russell was trading in this small zone for the whole night. It closed Thursday here and for trading for the whole. So this is kind of a balance area. Let me put a rectangle here which tells you that this is the balance area. You see this shaded area? This is all green. I can change the color of this. One second. This balance area. I change its color to something else. Now this is yellow, so you can see it better. Okay. So as soon as the market jumps out of it, and we are here, but market came down in the morning as I saw, and it was here. It came, so I can expect it come down to at least other zone, but we missed that. Let's assume we missed that. Now we again started this. This is turning green and market opening. This arrow tells me the uptrend is starting, so I can take some risk here. And if I take a position, this particular zone, this one has already been tested previous market right here. So the second time is likely to hold. But even then, this is 15 minutes, so let's get down to 5 minutes. so we can see it more. This is the same chart now, 5 minutes. So at the same time we here it again created some reaction, but this time the market slowly went to the, and where did it stop? Right here. So if all I do, as soon as the market starts, came down here, I see this indicator turning green, which is telling me the uptrend is starting, and I jump on the board. Price is 2000, value Russell value is 2000, and I pulled out at 2000. This is 15, this is 16, 2016. So how many points I got? 16 points in Russell. My position size table was how much in Russell? 5 points. So if I got 5 points, which is 5 points, and how many points I earned? 16 points. 16 times 5 is 80 for one contract. Oh, and so that means I earned $400 out of it. Right? 5 times 5 times 16. And how much risk I put there? 125. So what was my risk to reward ratio? 3.2. And what I did, I just patiently waited for my indicators to turn green, which was this indicator to tell me that an uptrend is starting at this point at 2000, and I just waited for Russell patiently, because Russell was having some problems here. It did not go just like it did last day, and I stop here for the time being at the next zone. Correct? Now Russell again, the zone created some reaction, tried to came back but did not came back, and again tried to approach it. What is this is telling me? This is green, and Russell again approaching this zone, that this time is likely to cross this zone. Why? Because the zone did not create enough reaction to let it come down to the zone below or further below. The market is still opposite uptrend. It's just a small kind of hiccup, and the Russell carries on its journey till when? Next zone. So if I do not come out of this position from Russell here, I said okay, let's take some risk, move my stop loss to this value so I don't lose any money on this trade. Okay, but let's take some risk and let's carry on. And we waited for next zone to come in play, and for all the practical reasons the Russell could not reach this zone, but we will count it as a zone because the zones are not cast in stone. When the Russell trying to come down, we see this red bar, we came out. Now we have, instead of 16 points, we have 24 points. Or I can still wait, see how far it go, because I already out of risk. I move my stop loss, I cannot lose my position. I'm here or here. I said, okay, fine, let the Russell go. Ultimately, the Russell goes 2 times first hour high. First hour high was somewhere here, right here. 2 times this position or the next zone. You see it? Again, it is stopped at the next zone. So if I am patient enough, I don't have a problem with my money, or I have the big heart to see all this chalking around. But this is not the time to make a new entry. I can wait for this point, which is 36 points or 38 points. Because do you see any this kind of bar, light orange? No, right? Is anyone there? No one is responding. Bobby, you have a question? Rama?
Sorry, Sabri, I joined really late. I'm kind of like, I don't want to jump in the middle, but I have one question regarding Russell and why you see it better, or you see it better for trading now.
No, not necessarily.
What do you
better.
see in Russell?
No, it's always better. Not necessarily. Russell, in fact, the ranges of the Russell are normally less. In one given day, the Russell probably moves only because 1982 to 2038, right? So the Russell range is just 38 points compared to 500 points in Nasdaq. Remember, the Nasdaq has $2 value, the 500 times two times value. So per point value, Nasdaq is come. Russell's per point value is 5. To answer your question, Russell is composition of 2000 stocks, small cap.
Yeah.
Right? So Russell is not dependent upon one or two or five or ten stocks, as in case of Nasdaq, especially, which was
Uh-huh.
this slide right here.
Yeah, market cap weighted too, so that's why.
Yes, so it has a composition of 2000 stocks. So the collective behavior of 2000 stocks, one or two stocks not going to make, or 10 stock not going to make any difference. So that's why it moves bit slowly, and that's why at particular zone its reaction is better, but does not mean it is always going to be better.
Uh-huh.
At one time, small step stocks may be hit too hard, all of them, and the Russell could be volatile as well. So I mean that's the market, right? But most of the time,
Yeah.
I've seen that Russell probably is respecting the zone. From my own experience, is better than other. But Nasdaq also does the same. But Nasdaq give you a big range. In other words, good big opportunity to make a good amount of money. Rahman, you have raised hand. If I can,
Anji,
Ji.
if I may can ask question. Yeah, in regards to Seam's question, in a nutshell, Russell is always more volatile than S&P 500. I don't know. That's how I feel.
Hmm.
Um,
No.
my
Okay.
question is, are we going to talk about anything about options on future, like
No,
the
not
future
here.
contract?
Today's was just the
Not yet.
feature, not the options.
Uh-huh.
Not here.
Not here.
Options on the
Okay.
future is
No
another
worries.
derivative of the future itself.
Yeah. Okay.
So I haven't prepared anything on the option because I don't trade in the options anymore. I mean,
Oh, okay.
and I used to trade options on stocks only. So just like
Okay.
people who are aware of the option, there are options available for the stocks. So there are options available on the futures, especially the
Yeah. Yeah.
future
No.
markets.
No. I know about that. I was just wondering if you
No, no,
wanna
not
talk
today.
about
Not
that.
today.
Okay. All right. Okay. Excellent. Thank
So
you.
my question, sorry, Sabri, my question was from the macro economic point of view. That's why, like, not just a minute chart or this, because of in the rising interest environment, small cap usually tends to not perform. That's what they say in the
Yeah,
rising interest environment, and that's what we are going
yeah,
to
that's
see in
correct.
the next months. That's why I was asking.
Was seeing our focus was here is to day trade the
Yeah.
best available instrument we have, whether it's a Russell, whether it's S&P in ES, or whether it's Nasdaq. So, and
I
which
understand.
three we have picked? Russell as so, and one particular day, I what I do I keep a track of all three open right here. Russell, this particular chart, all three open. So we have three windows here on top, right? Nasdaq, Russell. Sorry, this is Russell and this is S&P. And which one is approaching? So I'm monitoring all three of them. This is what I'm saying. And below here, the
Mm.
New York Stock Exchange tick and advanced decline line. So which one is approaching a good strong zone is a better candidate at that particular given time for a short-term day trade.
Okay.
Any of these three. But normally I prefer Nasdaq because Nasdaq gives you a good range, although it's volatile, and S&P as well. S&P is less volatile, as Rahman said, because it had higher volume or more liquid. Russell is more liquid, that's right. But in my experience, look for this example on this chart on right. This is 5-minute chart. Russell respected this zone here, right? On the right one. This zone here again, then it's chopping around the entire day, and then this zone again here. So it gives you some better value. Just my experience, and this zone here as well, right here towards the left. So all you do if you from zone to zone, if you analyze that when the Russell is reaching a zone, you analyze the market's condition, movement, momentum, whether the zone is likely to hold or not, what are the levels, it is providing good support or not, and then you make a decision according to that time. Because what are we trying to achieve? Our objective was to trying to achieve some site income for $200 to $300 per day, and that's it. Let me admit Parvez again. I don't know why people are keep dropping and coming back. There are only 7 or 8 people here. So Parvez, you are back. Thank you. Anyway, so in any given of time, we monitor all these three. This is market, right? This is Nasdaq, this is S&P, and this is Russell. And which one is providing you give opportunity, especially when it comes to reversal setups. So these are reversal setups. We're talking about a market making a U-turn reverse, and these are tricky as well as time because it's not going to happen again. Nothing is guaranteed. What if it turns back? My experience is that in the reversal setups are better than continuous setups because you enter a trade assuming that the market will continue its trend and it does not happen. The market make a turn and then you enter loss and you just come out prematurely. You said, "Oh, we don't know market will be here or next year," but we just come out of it prematurely. So that was pretty much it. I think it's almost 2 hours so far, but let me discuss some more things with you. Unless you have any question, guys, please come up. Do you have any question? Anything, Russell? No question is stupid. If you don't know, I mean, that's the time to.
Okay, so let me ask another maybe stupid question.
Go ahead, sir.
VWAP. How reliable is this indicator, you think?
Which indicator?
In VWAP, you were saying. Volume weighted.
VWAP is a fairly reliable indicator. It's just one indicator. You should never make a decision on the basis of VWAP, right? So VWAP in general give you an indication about whether market is bullish or bearish. For example, on this 23rd day, market once it breaks down, it is below VWAP. This is what? Nasdaq. This blue line is VWAP. This blue line is VWAP. So you can say the market is bearish. This is what exactly this shaded area is telling you. My own proprietary indicator. And throughout the day, market tries to come back and it finds support at this zone. Again zone. And no, this is what I was telling you, reversal setup. Market came down, found support here. So we realized market had made a good movement here. It made a reverse here 2 days ago. So there's a likelihood that this zone will create some reaction. Let's see. So if we enter here, so we are going against the trend. What is the trend here? Downward. Market is bullish. We are going against the trend, which is a risky proposition in any case. But
yeah, brothers, can everyone mute please? There's some noise. Somebody's washing dishes or something. So it's hard to understand something.
Okay, market made a U-turn.
यार बेगम से कहो बाद में धो लूंगा बर्तन.
Okay, market made a U-turn and then it stopped again at this, where we have another level, this R1. If I just made entry here 1370.19 and I came out here at this zone when it 13859, how much money I make? It's 150 points, 140 points, let's say. 140 times this is Nasdaq. If I risk only one contract, $2, so 140 times $280 straight away from here to here. In how much time? 11:30 and 10:15, 1 hour and 15 minutes. And I'm going against that.
Most of the indicators were against at that time. The momentum, the MACD.
So why did I decide to go here? Because market has already traveled a lot of distance. It's known as short-term exhaustion in one given direction, and one it has given, unless it is consolidating, like this. If it is consolidating here, then it's likely to come continuous journey. So this zone, or every zone for that matter, is likely to create some reaction. Unless there is a big panic and something going on, like the Third World War has started, or something very, very big, then it will. And on this day, market is very weak. So on this zone, it again reverse it. So all I do on this zone, I make it look okay. entry, came out here, correct?
Yeah.
And then there are ways that now we realize that market will continue or not. Now is short term exhausted in this direction as well, because the overall what is the overall bias? Answer your question, Wasim.
Down.
We are under the VWAP. What
Down.
these things
Yeah.
we were reversing lower, so market will just not go like that straight away, because this
Yeah.
zone will create some reaction. It will come down, and if it is turning bullish, then it will come back again. So we can again create a trade here in the direction of the trend. So let's say we make a trend here and here. How much money we said? We just one small micro contract, $200 something, right? $63, whatever. We again make an entry here, but now we are making entry in a market trend direction, so we can have two contracts. And let's say we 13.8062, we short it two, we continue, and as long as we are below this 10 days 10 period moving average, it means, and this we are looking at this shaded area, we are fine all the way till the market close. We were in this direction, we were not coming back above this line. Our PPO or MACD was totally negative, and we end towards the close at this 13,498. This is 13,860, 498, 360 points roughly. If I just make two contracts, 360 times 4, that is $1,400. Because my indicators are telling me the market is bullish. And how much money?
So do you?
Go ahead.
Yeah. Sorry. Do you tweak VWAP or any this indicator, or do you take it as the way it comes, like 20 minus plus 20, whatever it says, like the value based on the number of based on the equity you are trading? Do you have to tweak it, or you just
No, I
leave
don't
it
have to tweak. I
at
just want to
standard?
plot it once time. This is 24 hours volume weighted average price. What it is
Yeah.
telling you that based on the how much volume was traded, or that particular,
Yeah.
in this case is a future contract, otherwise stock is same thing. How much volume times the price at this volume,
Yeah.
okay, and then it average out. So
No,
the
but
more
you can
volume
see
traded
there
at
is a
one
big
given price,
difference.
the more likely the volume, the weightage of that particular price in that average calculation will be higher. Sorry.
No, sorry. I was saying that there's a big difference in volume in day and night if it's taking 24 hours live market. So the numbers could be skewed.
Correct.
Isn't it?
Correct. But 24 hours, you see, it has a starting point of calculation. So when I decide, when we define it, so we said, okay, 24 hour, but what time it starts? So for example, at this time it zeroes it. At this time the price value and then the chart value will be at the same level. This point right here, 3 o'clock, 3 o'clock my time, when the market shuts down. Now you see, say the market was very slow overnight till this point, so the VWAP market was around VWAP. Okay.
Yeah.
Market was very bearish, and it means the market is coming down and down and down. Distance between the market price and the VWAP is increasing. It means that the more volume we are trading at the lower prices.
Yeah.
That's why the distance between this 10 period moving average and this is keep on increasing till this point. Now, ultimately, market will stop, find support. Support where? At a good support zone. And this is where the zone come into play. My zone came into play right here. I already have that zone plotted over here. You understand my point? So I knew in advance, look, this distance has increased too much. Between 10 period, it means every 10 period, the price is keep on increasing, decreasing. It has to stop somewhere. Because what happens? There are people like you and me who are trading, and they will see it. They say, okay, now it's time to get some profit. They entered here. They say, take some profit, and went out. Correct? And they see the zone just like I'm looking at this zone. They see the zone as well. So the most likely the zone will hold, especially if the market is exhausted. And this is short-term exhaustion. The short-term exhaustion means market will move in the reverse direction, find some resistance and support in the reverse direction at some point of time. Enough is enough, and market will start continue going back into the same direction. For the whole day, market was bearish. So this short-term pullback does not mean that the market has become bullish now.
Yeah. So what do you say about Monday? Looking at these charts, where is your support
Monday
resistance?
will come at Monday because every day is a new day, and every day there are new news. Correct.
No, but your support and resistance you plot in advance based on the previous pivot points, isn't it?
I will receive by today. Then I will based on the Friday. Correct.
Yeah.
Then I will plot it automatically. My Excel sheet will. I will have this here, and it will plot it to my. So then we will have this support and resistance for the Monday morning. But before Monday morning comes the overnight session, group X session, which, for example, the market, future market will open at 5 p.m. my time or 6 p.m. Eastern time, and they will trade for another 12 hours. But market being so volatile these days, for example, there's a big news out there that they are going to expel Russia out of SWIFT banking system. Right? I'm just telling you. So that is going to impact some impact European economies as well, not just Russian economy, and US economy as well.
So these days it's news-driven market.
It's news-driven. So what impact is gonna make, I don't know. You don't know. Nobody knows. So the overnight session will be very important and very interesting to watch, I would say. And then when it, who has pulled out? This Parvez Rahman Rabi again pulled out. I think he's dropping number of time.
Somebody left. Parvez left.
No, Rahman. He's being disconnected number of times. Anyway, and earlier. So it will be early in the morning. I mean, around 7:30 time when the market is about to open, to see that are there any fresh ranges or levels that have been formed. And at that time, looking at, because I'm expecting a big move tomorrow as well. There will be a big move, and most likely, look, it doesn't matter what I think. What we need to see what market is doing, whether it's standing up, trending down. What's the bias? What is the bias here? Market is green.
Trending up.
Market.
It's a big reversal.
Market is here. Even the reversal are not being played, but reversal are working. Like market when came down, it found support at this zone. Ultimately, market got short-term exhausted at this zone. Kept it for a while, and then it started consolidating in this narrow range. Then its market was too strong.
Is this Thursday's chart you're showing?
This Thursday chart, Thursday Wednesday.
Yeah. So that only happened 3 times in last 20 years. They're saying.
Unusual.
That reversal, that kind of reversal only. So that's an extreme case where obviously whoever was in would have made a lot of money in the right direction if they were.
Right.
But normal days is not this much. Like only 2002, 2008, and yes, Thursday they said the market reversed more than 3%.
So the entire month has been kind of highly volatile. I'm not sure which particular day I can.
But Thursday was extreme.
So Thursday was some normal day. Rahman again. What happened to you, Rahman? I mean, you are dropping quite frequently. Something wrong with the connection? Rahman, you are back?
I think he wanted to hear something or talk about options a little bit, but
but actually,
not the topic.
I don't work on options anymore. So I don't, because this is enough. I want it to be as a side income. So if we can spend, let's say 2 to 3 hours, maybe 2 3 hours, patiently we can work out some other thing. And if we find a good entry based on support zone, and we based on our structure, and we can make some, let's say $200-300 on a consistent basis, nothing like it. I don't need more than per day.
Yeah.
But I can.
It's a lot of work you have put in. What is the how others can participate, because it's a quite busy chart. These green and like
I don't know,
pink bars coming in.
Each person is different, and there is a learning.
So how can somebody take advantage of your knowledge and research at this time?
I have never given a second thought to it. I just want to share it with my colleagues, and maybe, for example, people who have some experience want to explore, they can do it, and then we can share something. That's what the intention. I never thought about it. But
I'm for it. Tell me what to do.
Sorry.
You know me. I'm for it. I know you have a lot of knowledge. I
No,
just
no, no,
wanted
no.
to learn how do I
I
do this.
was thinking
Like,
of,
let's.
look, each person is different. What time frame you have, what money you have, what objective you have, and how much, because this is not easy, Basim, especially futures. You know that, no?
I know.
You know, it's
Hmm.
not easy.
Yeah.
Why it's not easy? Because market is market, and you're playing with the zones and the trends, and
Yeah.
market
No,
has.
I wanted to apply this onto stocks, which I trade. That's what I wanted to use this platform.
I was thinking of it, maybe,
Yeah.
but it's a long term thing. It's not right now. I don't have anything in mind, but maybe for the stock and this we can have some services for the people, and we can, for
Hmm.
example, what services I can come up with all these zones, and just like those guys are providing us, so we can come
Yeah.
up with all the zones and the trends and signals, and we can provide people with the subscribe to our services. But that's an afterthought. I had nothing to, I mean, nothing in mind to share with this group at this time.
Okay.
Out of context.
Okay. Thank you very much. Then I think
No, no,
yeah,
not.
I can listen to the recording later because I missed it.
Are you?
It was so important
Of
and
course, we are
somehow I
recording
missed
it
it.
now.
Yeah.
Now, challenging days. As I said, the market is very challenging. So our strategy is, what was our strategy in a nutshell? These two things. What was that? Miss it that? One second before you. Yes, this is what we do. Trending markets. How to assess and jump onto trend pay. And this is what we do on range one markets. Take the reversal position at a strong zone and support. That's what the strategy is. Simple. How do we do that? Using these indicators and tools which we have just discussed online. How do we manage the risk? This is how we manage the risk. And our position sizes, suggested position size. And you see in the micro, even futures are actually an excellent tool because they have very little risk there. It's a very small instrument, $80, 100. But look at the ranges and at the return. You can generate $200 to $300 in my opinion very easily if you have good understanding of market behavior. One thing I would like to say that what if it does not work? Then you need to stop somewhere. I think I shared this slide with my stock trading as well. That the 3 consecutive losses in a row, then you are not in the right frame of mind. Stop it. Do not overtrade. And if you have 3 losing in a row, because this thing is very addictive. You are sitting in the if you have time, sitting in front of a computer, especially if you make some money. If you make some money and then you think, oh, it's very easy. You see, I entered at this zone and I exit at this zone, I make $300. Very easy in half an hour or maybe 15 minutes. But it's not. Because when you think that you have made some money in an easy manner, that's where the market will change and show you its real colors. So you should be always on your guards and raise your guards and should always willing to learn and try to understand how the market behaves at different times, and never fight with market. If you lose the money, expect that and analyze that why did you lose the money. Not when I lose money, I lose money when I start chasing the market. In other words, continuous setups. Now there's switch to simulated trading mode. Now if you say, okay, too much stuff, I want to do some simulated trading right now, what should I do? On the resources section, if you haven't seen this, I would like you to show this CME future group site. CME futures group, they the exchange who have all these futures like corn, soybean, crude. We're talking about this E-mini, S&P, Nasdaq, and Russell. They're all here. They have a very good. You can anyone can create an account, and they have a good trading simulator. Okay. So if you go back to the presentation, this is the link. Here is CME group, and yeah, we are on the CME group website. If you go back here and you find a broker, you can find a broker, or you can here. They have excellent courses here. You want to learn more, right? This one presentation or 2-3 hours is not enough. So you can go and search in for futures sessions. Futures. Define your search and And you can even make a search on understanding future spreads. They have hundreds of courses, and you can for search for maybe ES, let's say introduction to optional Rahman, you were asking about optional futures, so they have optional futures versus ETFs. Is Rahman there? Yes, he's there. And how to trade different types of futures. One thing in particular.
Ji Sabri, I'm here.
Yes, so they have options on futures as well. One thing in particular, they have a trading simulator, which is right here on CME Group website. If you go here and you can create an account which is free of cost, and then you just log into it. I don't have an account with them because Sierra Chart itself provides a simulator, and then you can on a live basis you can start practicing it without putting any money into practice. Okay, so Sayyid Masood, I think he has dropped out. He was there. Anyway, we had just 7%. So that's what I wanted to share. This particular slide. If you want to read some books, you can start from the Boy Otter's book and optimize your trading edge. I highly recommend you to go through this third book here on your becoming your own psychologist. Trading in the Zone is an excellent book by Mark Douglas. Read these first 3 books in any case. If you want to go to the CMA group, go and get some free training courses and trading simulator. Lot of materials on YouTube channel. This one particular is about day trading micro e-future. This is a guy who's just trading and he talks about trading e-mini and especially micro e-mini futures. Brokers also provide their courses. There is a forum in the futures forum. For the paid, obviously you need continuous mentoring and learning. This Open Trader, which initially I attended their course, at that time it was costing me $2,000, but right now $6,000. This guy, e-mini player, he's a Pakistani by the way. He runs this site, provided daily zones and daily recaps on assessment of the market, but they charge high cost, $97 per month, so I no longer subscribe to them. To the tick.com, from where I received these zones at this time, is this. So for same, given your idea, we can start this kind of thing to the tick.com and then provide zones to the interested people. We can calculate, we can come up with our own zones. We don't have to subscribe to them.
Yeah, that's what I'm saying.
You need to have.
I think it will help.
Say again?
No, I'm saying this is how much effort you have put in. Now we need to take it to the next level and see how our group can take advantage of this, not repeating or reinventing the wheel again. You have put a lot of effort in it. So it should be something for you, and we should be learning expedited.
It's an opportunity because you cannot make a living out of the futures. Not every time, every day, you have this opportunities available. You have to do something on that. Platform of Sierra Chart, that one I use, TradeStation, Ninja Traders, Infinity 80. And as I said, it's very easy to open a future account. Anybody can open it with the $500. And then you can start practicing it. And then I would say that you go for a CME group trading simulator if you want to practice it for free. Why not? And you will be only now I'm not saying whether it's successful or not, but what it has given me, it has really given me insight into how market works, how S&P works, how Nasdaq works, how Russell works, and how each stock is linked with them. That's what it really gives you an in-depth understanding of that, which is a very complex thing. It's not easy trading the markets. So those were the points I wanted to discuss. I think we have spent good amount of time. I have not gone through the order of the slides as such, because there was a lot of good discussion going on. So any questions from any sides? And then they are welcome. Kamran, you're pretty quiet. No question. Shahid, you?
Yeah, I'm here. No, actually, I don't do any stocks. So
that's fine.
My business is mostly, the real estate, building my own portfolio that I'm constantly doing, and then I never did any stock.
But you are here for us guys, so I really appreciate that.
Yeah. So I never did any of this game, because anything like you doing, started doing, for like 9 years now, I think 10 years, and then he started up from beginning. So anything like I did 28 years, and I did from the beginning. So it's not happened over 1 or 2 year experience that you can be on that level to start making money. It takes years and years in the business, and then you have to constantly improve your knowledge. So the way that I do it every day is my duty in my organization. I have to educate myself. I spend every day 1 hour, 2 hours reading all my articles about my industry, and keep it up, and then moving forward. So the knowledge and तालीम is your key. Any business you are in. So इसीलिए आप दूसरे बंदों को supersede कर सकते हैं unless if you don't have a knowledge. I'm doing pretty good in my end of business.
इंशाल्लाह next session हम आपसे रखेंगे to learn from you in your area.
Yes. तो वो यही ना कि वो young age से शुरू होता है.
Correct.
So it is.
Kamran, are you there? Totally mute. Never any comment.
I see Sabri के जब घर गया तो मैंने देखा Sabri का setup. I was very happy to see, and it always start with just like I did in 1999. I made a small office in the basement, and then when you are serious, when you start with the small, then you'll be able to build big. But you have to start somewhere.
Yeah, definitely. When I changed my job, my job and other things, so that's why the big change for me. But I really like, since I've been doing this stocks and other things for last 15 years, 16 years. But futures I've been doing less for 5 years. But I'm not sure. I don't. Each one has to evaluate his or her position here. I mean, by himself. That whether it's.
So and I'm pretty sure कि साबरी जो हैं वो अगर इसी तरह से growth कर रहे हैं, I think you'll be able to, go big, and then you'll be able to transfer all your information and all your knowledge to your kids. And then that's the end goal,
Thank you, Shahid. Thanks for your comments. Any more comments on any side? Parvez, Bashir, Wasim, Rahman, Kamran?
So there.
Can you hear me?
Thank you. Thank you for your time, Sabri. It was a really good, informative session.
I'm here if you have any other question. I know Faisal Iqbal, he had to go, but we had many questions. Offline, he asked me quite a few things.
Sabri, आपका time or presentation, thank you very much. It was really knowledgeable, and we're really thankful for the effort you put in. ये कोई आसान काम नहीं है presentation बनाना, फिर उसको समझाना, different level. It's really impressive, and we are really thankful.
By the way, I have not confused anyone.
Yeah, thank you.
नहीं आपने confuse नहीं किया, लेकिन it's very knowledgeable. जैसे comment किया है किसी ने कि it takes time to get that level of expertise, understanding. तो अगर आप जितना जल्दी इसमें understand immerse करें अपने आप को, तो उतना ही ज़्यादा फायदा होगा लॉन्ग टर्म बेसिस पे. तो अनफॉर्चुनेटली मेरे लिए आई हैव नेवर डेल्ट विथ बाइंग स्टॉक्स. खुद ही अपना क्या कहते हैं किसी इन्वेस्टमेंट एडवाइजर से थोड़ी बहुत नॉलेज ले ली, और फिडेलिटी के साथ या नहीं तो फिर किसी के साथ वो फिर मैनेज कर रहे हैं, लेकिन कभी खुद से मैंने नहीं किया. तो मे बी दिस इज माई फॉल्ट कि हालांकि अपॉर्चुनिटी है, लेकिन बट देन एट द सेम टाइम यू मेक योर चॉइसेस early on, and then you have to stick with it, I suppose, unless you want to venture off to learning curve and understanding new things.
It's also a teamwork. If you have a teamwork and घर में सब लोग साथ हो ना, तो एक आदमी बिजनेस
हो जाता है कभी.
Teamwork is very important.
वो लाइव नहीं है हमारा CP24. उसका प्ले का बटन दबा हुआ है.
There are no more comments on any side. So thank you very much, everyone. And Wasim, we can discuss that thing offline, obviously.
Yes. Thank you very much.
Thank you very much, Sabri. And
Kamran here.
God bless you, and thank you to everyone.
Thank you.
Yeah, I wasn't following, but I was just listening to your soothing voice.
That's the best comment.
Okay.
Anything from you, Kamran?
शुक्रिया साबरी.
No question.
Right.
Thank you.
नींद तो पूरी कर ली ना आपने.
Okay.
Okay.
Especially all the thanks to Shahid for arranging this
Yes.
thing.
हाँ शायद thank you
He's
इंशाल्लाह फिर आपसे बात होगी इस
and he
weekend पे
spared time.
Yeah,
And
inshallah, we see you on
Shahid, inshallah
Saturday.
next time.
हाँ यार,
जी
Next time we
शाहिद
have
का
a
शुक्रिया
presentation from
करना
you.
याद नहीं रहा। शाहिद भाई आपका भी बहुत शुक्रिया।
नहीं, कोई बात नहीं,
अच्छा
इंशाल्लाह
नहीं,
फिर
before we go,
मुलाकात होगी
रहमान
सैटरडे को ह्यूस्टन में।
रहमान यार
जी।
आपकी तरफ से ड्यू था भाई एक
इंशाल्लाह।
presentation next time.
नहीं मेरी यार मैं बीमार पड़ गया था अभी काफी
हाँ।
ज्यादा। आई वाज इन हॉस्पिटल।
हाँ
तो अल्लाह का शुक्र है अब मैं कुछ दोबारा से रिदम में आया हूँ।
बनाए भाई कुछ
And,
इंशाल्लाह अल्लाह ताला को सेहत दे।
दुआ कीजिएगा अल्लाह खैर रखे इंशाल्लाह। थैंक यू।
अच्छा जो ग्रुप में जो लोग यहाँ हैं, if you are interested I can send you this presentation offline separate, सबको मैं ग्रुप में नहीं भेजना
प्लीज
चाहता।
जरूर
जरूर
प्लीज जरूर भेजिए।
और इसका
और
जो है
recording भी।
वो प्रेजेंटेशन भी कर लेंगे इसकी, और रिकॉर्डिंग तो कर ही रहे हैं, शायद भाई मुझे भेज देंगे इसकी। ठीक है
जी।
ओके, थैंक यू एवरीबॉडी। अल्लाह
Thank you,
Okay,
everybody.
yeah.
Thanks, every.
थैंक यू शाहिद।
Waalaikum Salam. Allah Hafiz.
Recording stopped.